10th refund you didn't see coming, Kwong and Abdo. By all means, join us. Even if you've already seen the webinar, it's available for replay. And even if you don't think you need to hear it again, that's fine. But if you go there, we've been updating additional content that Frank has created on this. You might want to go and review it. One of the most recent things is they've been rethinking the whole, this is related to interest and penalty only, and it didn't extend, because they keep saying postponed, it didn't postpone the due date for tax returns. Guess what? Maybe it did, and there's a belief now that, personal belief anyway, you should try those time-barred refunds from that period of 2019 through 2022. Try and get them, try and go back and ask for them. Ask for reconsideration on it. Returns that weren't filed, go file them, try and get the refunds. So please keep in mind this is open. Warn people accordingly, but there's probably money left on the table that they need to reach for. 250th anniversary tax update. America's 250 years old. Well, this is the 250th tax update. Not quite. But join AJ Reynolds. This is a subscriber-only event. Join AJ for 3 hours on June 30th. Start your 4th of July weekend right by coming in and getting 3 hours of tax update. We all need that. The 2026 International Tax Conference is in New York City, October 26, 27, 28. Please join us. It's a fabulous time. There will be 2 different mixers, where one's on me completely, that Monday night mixer with the rooftop bar. Happy to have you along. We've kept the price. If you register before May 31st, we've kept you at last year's pricing, super early bird rates. We didn't raise the rates. Same venue. Some of the costs went up, but I know travel went up too, so we're trying to hold the line for you if you register early. So please consider joining us. If you have any questions, call, email. Someone will get back to you, and we will tell you what, or answer whatever questions you have related to coming to the conference. Last week's numbers were only updated through April 17th. So to their credit, the IRS got caught up, and today we have numbers through today. They're probably actually through last night, but they're posted today. So taking a quick look at some important things, the most embarrassing thing the IRS has going for it, forget about ERTC claims that didn't get processed or took 2 years, forget about tax returns that took 23 months during COVID, and forget about refund claims right now. Most embarrassing, forget about 2848 upload delays. October of 2024, 18 to 19 months, depending on when you look at the calendar and how it falls, behind on processing penalty identity theft affidavits. Outrageous that people sit in limbo for 2 to 3 years of tax returns on this stuff. So that's still a problem. Something that we should be talking to our congressman about. E-file, 21 days of acceptance. That's generally true, although I couldn't find anything official, but man, it's been all over social media, and we experienced it here with some clients. 2 weeks. It was Wednesday and Thursday, Wednesday mostly, that the final extensions went through. Extensions were processed, payments were processed. There was something secondhand from an IRS liaison. We saw nothing official, but it was a solid 2 weeks getting all that stuff processed. Pretty amazing. Original returns submitted in March electronically are being processed. Amended returns, paper returns. Electronic is 3 weeks, but with a wink and a nod that anything that requires additional research, error correction, special handling will be more than 3 weeks. So who are they kidding, right? Most people, most of the time, 21 days. Everybody else, not so much. Paper returns, they're up to March 2026 on paper returns. That's pretty cool. I remember how many years they were behind in other things. Amended returns, they're processing back in February. But that also means these are electronic returns. There's plenty of things that required special handling, right? And we have amended returns outstanding over a year. So at least they're getting looked at. Business processing timeline, electronic returns for the current year, 21 days. Paper returns, March of 2026 are being processed, and amended returns from August of 2025. I have paper returns that are still outstanding that were sent certified mail. I still feel like we need to address power of attorney forms. I saw a couple of posts today that I didn't delve into about how this needs to be fixed, how this is a problem. They're down to 8 days again on 2848 processing. I agree. That's what we're seeing is a week and a day. Depends how it falls. There are some holidays coming up. Juneteenth is a federal holiday. 4th of July is a federal holiday. And these things tend to also turn into long weekends for people. Juneteenth is a Thursday or a Friday. It's going to be a long weekend for people. They'll probably take an extra day. 4th of July, people are going to take an extra day. And that's always interesting, too, because 4th of July falls funny this year. So some people are going to take the Friday. Some people take the Monday. Be very interesting how that plays out and how that impacts the processing of these forms. I still think Kwong and Abdo, potentially 1 million forms 843 have to be filed, potentially. So how many transcripts will that turn into? How many transcript requests? How many powers of attorney need to be filed, processed, and weighted so that we can get transcripts? What's that going to do to the phone lines, Kwong Abdo? So I'm concerned. Is that the presidential for 2028 elections, right? Kwong and Abdo. Talk a little bit about Kwong and Abdo today again. W7, March 2026. That's pretty good considering those are all paper returns, paper documents. Residency certificate requests finally moved out of 2025 and they're in January. They'll be there for a while in January. The vast majority of residency certificates come in December and January. Tentative refunds, both for Form 1045, Form 1139, are in January of 2026. Also pretty good because these are paper filings. I'm thinking of dropping reporting on Form SS4 unless it becomes some out of control number or something we need to discuss. Dropped down to 5 days on faxed in SS4s. Paper submissions are within 30 days of receipt. My experience still is for our out of the U.S. non-citizens, folks without a social security number for non-U.S. based businesses, where we're faxing in the SS4. I still am experiencing call with a power of attorney in a week, and they're able to give me the number. So that hasn't changed despite 5 days, 8 days, 10 days. A week later, we were able to get the number. The dial on individual correspondence did not move in the last 2 weeks. They're still processing mail from January for individual returns, mail from August of 2025 for business returns, and anything else that came in there as far back as September of 2025. Not good stuff, right? So the key takeaway, as always, is file on paper. You'll see things in 21 days electronically, 3 to 4 months on paper. So we have a number of bills that passed through the House this week, and none of them have become a law yet, but I want you to be aware of these things under my in case your clients ask thinking. So 7 bills passed. Both sides voted. Nothing really that affected the Internal Revenue Code, but Barcode Efficiency Act, processing of returns. We're going to speak about that briefly. Taxpayer Experience Improvement Act. Well, if you're down here, it's pretty hard not to improve. We won't address the IRS whistleblower program that continues to evolve. A new Taxpayer Notification and Privacy Act. Disaster Tax Relief Certainty Act. That's an important one to discuss. And then Supporting Early Childhood Educator Deductions Act is something you're going to hear about and probably hear about quickly as soon as it hits TikTok. So I should have led off with that one. Barcode Efficiency Act has kind of come up before. They tested this, if you remember, with Form 940. If you're coming on the program, I talked about it 2 summers ago. And the beta test of this was they took something easy. They took Form 940 and they tried e-filing it to themselves, scanning it and e-filing it, and even then they couldn't get to 100%. So barcoding has been talked about in the past, and what it's going to do is for things that are done on iris scan stuff, they don't want to do manual entry. They want a 2D barcode on the bottom of all the software prepared returns that are mailed in. They can be scanned with a handheld scanner and move on. No more key punch errors, no manual entry. I don't think the IRS cared about the key punch errors. They do care about the cost of manual entry. OCR, optical character reader, they want to mandate that for handwritten and other non-barcoded paper submissions. I don't know about you, but man, I can deposit a check, I can hand ChatGPT a document, and it reads bad handwriting pretty well, better than I could in some cases. So, and even things we used to use magnifying glass to figure it out, the AI tools pick it up pretty well. So I do think these would be useful and would be successful if the IRS commits or the Congress commits to the costs. Nothing in the Internal Revenue Code was affected here. This is all administrative, and they can do that. The expected outcome is that there's going to be a reduction in notices that are issued due to transcription errors, key punch errors. So there's going to be an issue, though, with barcode specification compliance. So now, similar to e-file, right? You're going to have to get your barcodes approved probably a year in advance, good and bad. The IRS shuts down, doesn't get processed. What happens here? Are we going to see delays in software? They'll figure it out, but that's what they're looking to do. Taxpayer Experience Improvement Act. So they want to create a public service dashboard to show real-time call volumes, wait times, and backlogs by phone line. Probably already exists. There's probably already a command center that they're aware of what problems they're having. I'm sure no one in Washington sits there and says, wonder if people are having a good experience these days getting through on the phone. That's not happening. There is a dashboard likely, and now they're going to roll it out to the extent they can. For us, you go to the IRS website and you'll see, aha, I'm not going to get through right now. Is that going to discourage me? Probably not. The IRS online accounts are continue to be expanded. They would like you to be able to get return copies, notices, refund status, estimated refund dates. Good for them. They want a callback mandate. If you have a 5-minute unanswered call threshold, they want to offer you the ability to get a callback. Okay? I think a really powerful tool would be that you can set an appointment that I can just say, I need to talk to you about, I want to talk to you about my installment agreement. It pulls up your account and it says, you're a large dollar case. You need to talk to one of these people. Here are your appointment choices in your time zone. You click it. What phone number you want me to call you at, sir? And it will call you back. That, I think, would be the powerful tool. But nobody asks me. They want a dashboard to schedule practitioner calls, reduce the dead hold time during filing season. I don't think they have any dead time, but what they're suggesting is if they do, we should be able to better utilize that and say, I'll take a guaranteed callback at this time rather than sitting on hold now. And they want to figure out a way to drive IRS account enrollment, expand POA-based access, and notice review. So again, that would be great if I didn't need third-party software. If I have a power of attorney, I get an email. Hey, we're putting a new notice in Sam Smith's account. I can go look at it. IRS whistleblower program, I really don't want to spend time on it, but it's in here for you if you'd like to take a look. The new Taxpayer Notification and Privacy Act would amend 7602. Notices are going to need to specify the exact information they're looking for from a third party. No more blanket, give me everything you got, right? I think you have invoices from this 90-day period. Please send them to me. They need to allow a 45-day response window from you, the taxpayer, before the IRS can, quote unquote, go third party. They should give you an extension of the 45 days based on reasonable cause. Fair. Getting everybody in the field at the IRS to comply with that might be interesting. Collection and other urgent circumstance exceptions are still in there, right? The case is already moved to collection. I've those urgent matters. Somebody is dying, somebody died, somebody's ill, somebody's hospitalized. The idea here is to get proactive production, to get the other part, get me, the taxpayer, to produce documents within 45 days to avoid that third-party content. All right. Now, of course, these things are timing defects are a procedural argument that needs to go to appeals or the tax court. So will that jump to the head of the line rather than, I'll file an appeal that in fact you didn't give me enough time. They want to move that to the top of the line so as not to further delay the collection process. The Doug LaMalfa Disaster Tax Relief Act. This is going to extend enhanced disaster casualty loss rules through January 21st, 2027. So in other words, the 7508A modified stuff isn't permanent. So they're extending it now through natural disasters that occur through January 1st. I guess they're going to finalize that probably this October. It'll be in the new budget. Expect another extension, though, to get there. Losses will be deductible without itemizing. The 10% floor of AGI will not apply during covered events. Qualified wildlife relief payments are going to continue to be excluded from gross income. We don't know what the effective date will be. There may be amended return opportunities for disasters. In other words, if this expires and then they come back and say, okay, it's not expired, or we're renewing it with no gap, you may have to go back and amend for something that you thought you had lost. This is going to be good. I hate when we spot relief things. There should be just broad relief on certain types of things, or either broad relief or no relief, not, well, this is okay, that's not okay. So we're going to amend Section 104. Compensatory damages from sexual acts or sexual contact will now be excludable. You can imagine where some of these lawsuits were had against religious organizations, against international sporting organizations. We've had some of these in recent years. Visible physical injury won't be required in these cases. Federal criminal law definitions are going to apply. Now, important, during settlement drafting, you're going to have to allocate among the excludable compensatory, punitive, and fees, right? So this is going to be something about educating the attorneys that are involved. Typically, the higher end attorneys get these issues because they have full service firms with tax departments. Sometimes the smaller personal injury places don't have this level of expertise, so they might miss this. An agreement might be silent as to how much is compensatory from the sexual act or the sexual contact, and we might have an issue being able to argue that, well, we should be able to exclude it. So we're going to want to see those written agreements include this. We expect an update to publication 4345, and we think there'll be Treasury or Department of Justice outreach on this. This could also be a refund opportunity. We're going to look and see what the effective date is and the statute of limitation dates, and maybe go back. So this hasn't passed yet, right? This is on the in case you hear about it list. But once this passes, I'll let you know that it passes, and you're going to have to take a look and see if you have people who have had taxable settlements. Can we go back and do something? What will be the effective date here? Now, the Early Childhood Educators Deduction Act is going to expand Section 62, basically the $300, what we think of as the $300 classroom teacher deduction, which now includes that additional Schedule A deduction starting in 2026. So now, early childhood educators, so schools and child care facilities serving kids under the age of 6. I think some of those folks do, in fact, have classroom expenses they don't get reimbursed for. And guess what? If they don't have those expenses, maybe they're going to start to, which I think is important. Teachers, principals, counselors, instructors, aides, these out-of-pocket expenses. The dollar cap is going to be unchanged at $300. However, the OBA indexed these things. So every so often, we're going to see that go up in $25 or $50 increments. I forgot which, right, based on indexing. And of course, that first $300 is deductible whether you itemize or not. It's for AGI, reduces AGI. So we're going to update our intake questionnaires. There's a preschool with about 150 kids right here in the other building. We talk to some of those folks occasionally. I'll make it a point to talk to the executive director and say, if it passes, of course, say, hey, can I come in at lunch one day, or can I come in to any staff meeting you're going to have and give a chat? We have another client who's the executive director of a school in the city. I'm going to reach out to her as well and just mention, hey, do you know this is out there? Important stuff. So those are 7 bills that cleared the House on April 27th. Remember, they have the rules are suspended for some of these things to get them through. Senate is looking at these things. It's a broader act. These House bills may fold into them. They may attach to the year-end vehicle. They may not get any attention from the Senate, so we don't know yet. House does incremental and low controversy things. The Senate is trying to do a more comprehensive bill just to get it done. There'll be some proposed regulations. There'll be internal revenue manual updates. And within the year, we should see some guidance from the IRS on any of these things. And we're monitoring these things for you. Don't worry. How are we going to integrate these things into the IRS dashboard? On the one hand, I think that's going to be a great thing. On the other hand, I think on days that I'm trying to get through to the IRS and I can't, am I going to have a client sending me a picture or a screenshot and saying, I don't know, the website said you should have been able to get through with a half-hour wait, buddy. Are they going to start scrutinizing bills, right? Your bill charges for hold time, and they're like, I don't know, I took a screenshot, and it said I could get through. Of course, those are not the lines we call. All right. We're going to look at the settlement issues, right? We're going to watch for 104A2. Anybody new who comes in with a settlement, we're going to start, or anybody that calls about it, boy, we're going to give them estimated payment numbers. We're going to talk about things. I'm going to tell them this may change. My scary thing is that do personal injury attorneys tell these people this law happened, even though it didn't? And do we have issues? So hopefully they don't tell folks that. In your database, some of you live, I'm sure, in a disaster area. That's easy, right? Most of the returns you do most of the time are going to fall into that cap. I have folks that live outside of the area, either the remote folks in other areas of the country, folks even down in New Jersey or on Long Island may see disaster areas when I don't. So things like that we try to tag anyway. Probably you want to have a system in place to tag those people now yourself, if only so I can go back and look at those things later. Right? So again, none of this applies until we get either enactment by the Senate and signature by the president, or it goes away. A couple of other things I want to talk about that we will talk about. The first, I think, is going to be one of the biggest mistakes they make ever. They want to index capital gains, and that sounds great in theory. But I don't understand how they would police it, and I don't even understand how they would do it. So the belief here is that $100,000 capital gain, if I have a $50,000 basis in an asset that I bought last year, that $50,000 is different than $50,000 basis from 20 years ago. Okay? They want to index it somehow, and I'm just not sure how this is going to work. So here's what they've talked through so far. This is coming from Ted Cruz and some of his allies in the House. They want to index the basis for inflation to eliminate the tax on phantom gains from long-term assets. So if my asset went up an average of 5% a year when inflation was running at 8% a year, I don't really have a gain. So the mechanics would be that we're going to adjust the basis multiplied by an inflation factor. What are you going to do? We're going to be actuaries now. We're going to go to a table, look up your year down down the y-axis and look at the rate across in the x-axis. Come on. The basis will be multiplied by the inflation factor for gains in sections 1001, 1011, and 1012. So there's an interaction potentially with the excess on the 121 exclusion. Maybe this is also going to affect the ceiling in the end. Are they going to change the ceiling and start adjusting that every year? That would be interesting, but that's easier to do, right? To expand the gain. This is only a proposal. There's no text that was introduced. Some of the proponents are thinking Treasury should do this by regulation and not legislation. Either way, I don't know how they're going to do it, but it's out there. If your clients ask about it, it's not even a proposed law. It's a proposed law, but it's not even something that's been presented. All right. Prior litigation suggests the House can't unilaterally index things without congressional authorization. House Ways and Means Committee Jason Smith goes to the John Sheeley School of how are we going to do this? Not that we shouldn't, not that it's a bad idea. How? Something called the Real Estate Caucus, which is a group of Congress people, actively are pushing this as a housing cost of living fix. Okay? And then, of course, the election year dynamics here suggest that it's low odds of getting passed by itself, but could it be a bargaining chip in some sort of broader Tax Cut and Job Act extension negotiations? So we're watching for a formal bill to come up. But again, we'll see. Remember, this isn't law. 121 still remains good law. Charitable vehicles are still available. Nothing has changed here. Of course, for those that are concerned that want to be tax planners, if this passes, this is a tax planning opportunity potentially. Depends how it rolls out. Certainly, you're going to hear about it from your clients. So as this develops, at some point, you might want to say to your clients, hey, it became a bill, but remember, this is how a bill becomes a law. I don't think you should share that video, that Schoolhouse Rock video I always share, but maybe you should remind people it's got a long way to go. It's got to get to the Senate. It's got to get to the president. And then the IRS has to figure out how they're going to do it. IRS got an allocation of $10.2 billion for their budget this year, which is a 3.8% cut from last year. This is reducing their enforcement budget, but it increased their technology and operations budget. Why? We're trying to do more with less. Why they've reduced enforcement, I don't know. This is the appropriation bill. It's not tax legislation. It's just setting the spending level, and there's some directive on what to do and how they want it done. This isn't statutorily binding on anybody. IRS is supposed to prioritize digitization of payroll filings, but they're not required to in their budget. We talked about this before. They did try and do this with the 940 forms. They tried to they scanned, and then the scanning turned into an e-file, and they e-filed it themselves. It was a way to use the existing processing system, the e-file system, by just e-filing 941s, 940s to themselves. It wasn't a perfect test. So what they're thinking, though, is that if we can somehow digitize 941, 940, 941X paper filings, I would say to you, you shouldn't be doing paper filings, these things anymore. But what do I know? As you do those paper filings, they want to digitize them when they come in, have them be more accurate, turn the frontline folks from key punch operators into scanning people. Okay. This should result in faster and more accurate cross-matching of wage data against quarterly employment tax filings. I think that's true. We also see a large number of incorrectly processed forms 941 that were done by hand because you skipped a line, you didn't write the word none, you didn't put in a zero, and the operator will incorrectly process them, especially true if you're processing, if a business has only underage employees. We've seen, underage relatives as the only employees where you have no social Security wages, no Medicare wages, the IRS assumes, what's the greater likelihood? That all your employees are your children, you have no other employees, or that you don't know what you're doing? Well, I would argue that in both cases, you don't know what you're doing, but we see those get flipped around and a bill come. And the answer is you have to then argue with the IRS, you processed it wrong. Here's what we meant it to say. All right. So this is not a statutory e-file mandate. So I suspect there'll be a pilot program, but I haven't seen anything yet. I don't know. So this is going to, you should switch your workflows towards electronic submission. And again, I think paper anything is a mistake. And a pushback I hear in the coaching groups is my clients don't want to pay for electronic, for using a Gusto, a Paychex, an ADP. Then they don't belong in business, and you shouldn't be working with those folks. This is 21st century. This stuff should all be electronic. You shouldn't be doing paper anything. These folks should expect something better, not cheap. If they want it cheap, they can do it themselves. Digitized 941X filings should reduce employee retention credit and payroll amendment processing backlogs, but the timeline is uncertain. I don't even know that they're processing ERCs anymore. The amended returns, maybe they are, and just denying the refunds. Enforcement funding cuts might offset processing gains. Well, we got to find the money somewhere. All right. So I don't want to dig into this. I thought this would be interesting, but this just deals with partial disallowance of credits. The 105C is the credits for SUTA going on to the FUTA return, and I don't want to talk about that today. All right. So capital gain indexing is not law, and we'll see how this rolls out. IRS funding includes a requirement, not a requirement, but a request for payroll digitization, and we'll see how this goes. I want to talk one more time about Kwong. So, because the National Taxpayer Advocate wrote about this in her blog today, there are going to be potentially 1 million filings of Form 843. In my opinion, this is the potential to shut down the IRS, or it's going to be like COVID at the Fresno Service Center. There's going to be mail trucks outside of unprocessed paperwork. So first thing is, what are you doing about your own clients? We've been talking about this in some other venues. I think at a minimum, we have a liability and a responsibility to notify all of our clients. If you touched a return between 2019 and 2023, either they weren't your client the whole period because they're now your client, but they weren't in the past. They were your client and they're not your client now. If you touched any of those returns, you need to get some sort of communication out that says, did you have a penalty? If you did, you might be due compensation. You might be due your money back. This is Kwong. This is Abdo. You need to talk to somebody who has all the information. So if we didn't do all your returns, somebody else didn't do all your returns, get together with them. And if you have penalties, you need to talk to someone about the next step. There is a non-extendable deadline of July 10th. Now, in most cases, what do you need to do? I want to get a fee, just like a rep case. You're going to give me a fee. For that fee, I'm going to get all the transcripts. I'm going to do the analysis. I'm going to give you a written report and a copy of your transcripts. But you're going to pay me for that. The notification I'm concerned about is just telling people it exists. Why? I don't want to hear in 2 years, I just found out I could have got all my money back. Sammy down the street got all his money back, whatever that means. And you didn't tell me about it, so I didn't know to file, and I would have gotten all my money back because I have a great story and a great case. I should have gotten all my money back. So we want to avoid that. We want to make sure everybody knows. You don't want to email people, or you don't have emails, mail everybody a letter. The ones you get back, return to sender, you'll have to figure out, am I going to call these people? Am I going to email these people? What am I going to do? But most of your people, most of the time, are going to get that letter. You're going to be done. You'll be clear. This is what's going on. This is what you might be due back if you had an interest or penalty. And, oh, by the way, if you want us to do the work, there's a fee. In some cases, we're not doing the work. but here's a big firm that is. Here's a do-it-yourself website. There are a bunch of do-it-yourself websites out there where the taxpayer, the client, will sign a power of attorney. They will electronically pull the transcripts, do the analysis, and get back to people. There's one website out there for $10 that will do the analysis. Take the power of attorney, get the transcripts, do the analysis. So that might be the place to send people who aren't looking to invest any money in this, but want to get the refund. There's lots of folks like that, right? So the national NTA flagged this as the broad penalty refund opportunity tied to COVID. Kwong reframed Section 7508 as continuous and not discrete. It ran all of COVID, not this part, not the part Congress wants to cover, the whole thing like any other disaster relief. The scope extends to individuals, businesses, estates, trusts, everything that was assessed between 2020 and 2023. The refund statute for under 6511 keeps running. The deadline is likely July 10th, 2023. We've talked about how that came into it, how we got to that. If you want to talk about this, learn more about it, go watch that Frank webinar. It's free to everybody, free to every practitioner, everybody you know. Somebody said, hey, I want one of my colleagues. How can I get them to watch it? I said, just go register. It's free. We even made, I forgot to advertise this, we made Sal Candela did a FOIA for us. He does that for NTPI, for NEEA. He did it for me. I paid him. Did it for us. It was part of a program last year. And I said, you know what? That's so important. We're going to make that free to everybody too through July 10th. You, all your friends, they can take it. You can get CE for it if you're an enrolled agent or a PTIN holder, AFSP. But by all means, and all of Frank's handouts and content are in there. We keep updating it in the link. So by all means, if you need that, go take that education so that you can help these folks. I think we need to do one more webinar. I'm trying to get a couple of folks who have bigger rep firms that are going to be dealing with this stuff and see what we can do, how we can talk about it, what workflows might look like. Now, the IRS does not agree with Kwong or Abdo. They haven't conceded. But not acting isn't safe. You need to do something. You need to file the claims and put protective claim language in there. Protective claim language says, although the statute of limitations is about to expire, this important case or law or something is pending. And if it passes or happens, it affects me and this claim. Please keep the statute of limitations open. We talked about that during California versus Texas. California was a person, I think, and they were suing Texas. I don't remember the details. But that case had the possibility to overturn the entire Affordable Care Act funding structure. And if it did, you'd get back your NIT money and your 0.09% Medicare tax. So we wrote letters in for protective claim language. That was a pain because we did over 100 of those and sent them out certified mail. And we need to keep it this tax year open for this reason. Da 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 da. All right. Don't do this work for free. Get paid. IRS authority to postpone deadlines, not extend. Postpone. The court held that COVID disaster relief was continuous, not a series of 60 and 120 day windows. COVID ran from the end of those days was May 11th, which ended COVID. Disaster areas get disaster attorneys. That's the deadline, July 10th. And that's why the class is the July 10th deadline you didn't see coming. Filing and payment deadlines arguably were suspended. Even your 2210 penalties. When is money due in a disaster area? On the last day, right? Everything gets suspended till that last day. So anything due between January 20th, 2020 and July 10th, 2023 is suspended until then, right? Starting with your 2019 balance due. All that stuff is suspended. Okay. So the IRS applied this relief through targeted notice, but these notices had defined start and end dates. Outside of those windows, penalty and interest was normal. Remember, they waived like the 2019 and the 2020 penalties and everything else they didn't. Kwong treats the whole period as one continuous disaster. The result is now there's a mismatch between what the law requires and what the IRS actually did. My goodness. Practitioners should not rely on the IRS concession here. Each claim has to stand on its own merits. We need to file the claims. Failure to file interest, individuals, C Corps, S Corps, late files on S Corps, right? Tax years 2020 to 2022 are in scope. Some 2023 returns will apply because anything due, any estimates or tax payments for 2023 wouldn't be due for Q1, Q2 until July 10th. So potentially there's stuff that was due that there's a penalty for, but the penalty shouldn't have applied before July 10th, 2023. Primarily, you're going to file a Form 843. We've talked about this. Every period has its own 843. So if I had 4 late quarterly returns, I have 4 Forms 843 to file for that year. So again, you want to tell folks about this. For ones you file, you want to track acknowledgement, certified mail for everything. IRS does have the authority to hold these claims if they appeal Kwong. They don't have to adjudicate. They can just send you they probably do nothing. They'll probably send you a letter, hey, we're holding it. We're not doing anything yet. We're going to do the usual, submit 2 copies, cover letter. This is my document for this period. Please stamp the extra 1 marked copy received and return to me in the enclosed postage paid envelope. Mail it in a 9x12 envelope because somebody wants to look at that because it's not been all folded up, right, into a little 3-part thing. Less likely to get lost, but also too, as it goes through the postal system, the number 10 envelopes now are all, even though they're certified, they go through the automation, and sometimes they get missed in those big flat gray things that hold 250 letters. But if you send it in a 9x12 envelope, that stands up straight, they see it, and somebody has to manually do it. Or it's not in the tray and it's in the bag and they still have to do it. So that's our thinking, is not to use number 10 envelopes, but to use a 9x12 envelope. And I spend far too much time talking to people at the post office to understand what's going on. I really want to do a tour of a sorting facility, but I don't think they'll let me in with my hidden camera. All right. So I'm not going to bore you here with the deadline stuff. I've got plenty of video on this, plenty of Frank Agostino video. Please watch it. Kwong is subject to appeal. We've talked about that. IRS has not issued non-acquiescence, concession, or broad relief. They haven't said anything, although we're aware they've paid some of the claims. 843s might be held due to appeal, denied on the merits, or litigated. Some of the big ones they're probably going to want to litigate, have to go to the Court of Federal Claims. They talk about something called Little Tucker, claims under $10,000. Again, watch the Agostino video on this. There's 2 hours of video, 50 minutes of Q&A. What do you want to take away from this? I left the biggest thing off this. The number one thing you want to take away from this is you got to notify everybody. Even if you don't want to help people, you have to notify everybody. Many of our clients, we have transcripts going back at least 15 years and powers of attorney going back 15 years and through 2029. We can pull these transcripts. Tax Help software has a window. They don't guarantee that it's perfect, but they have a little window now that tells you what are the Kwong potential benefits. So, man, I'm going to get POAs, upload them, and wait the week and see what they can pull down for me, right? We're going to look at high dollar cases first, smaller cases second. We're not doing anything free. But protective claims have to be in, even if we don't have a strategy, don't know what we're doing. They've got to file a protective claim. Form 843 can include protective claim language. So if you get to the point where you can submit your 843 as your penalty abatement, you can submit that and you can put your protective language in there. Basically, it says and in the unlikely event you don't find this supportive to give me back my money, Abdo versus Commissioner is going to affect me. Please keep this case open. We're watching for activity in Kwong. It'll be a circuit court ruling, and that could expand or extinguish this opportunity. Formal response from the IRS is going to shape maybe how these 843 claims are processed. Now, in theory, everyone, including the taxpayer advocate, suggests that maybe there should be some congressional relief or administrative relief. They could just say, here's the guy, here's what we're doing, here's what we're going to release, here's what we're not going to release, here are the cases we want to just forgive, here are the, you win, here are the ones that we're going to litigate. There should be some updates to the Internal Revenue Manual after this, based after Kwong is final. And some of these filing trends and professional, we're looking to see what NEEA, AICPA, and some of the other organizations say, maybe the ABA tax section, what they say we should be doing or our best practices and where this should go. That's what we're going to watch for. One last plug for my International Tax Conference. I'd love to see you there. 3 days. Rita Ryan, AJ, Andrea Valois, Frank Agostino, Marina Hernandez. Great group of folks, all returning speakers. First day is Rita's boot camp, but the other 2 days, all new content. So it should be great. Go to the website. You can see the content. It's published. Katie says I have a typo on my slide. Processing days is 18. It's not. Both are 8 days. Thank you, Katie. If you can't tell, I was in a hurry. I was in a hurry to get that done. I processed, where did that go? I processed several extension payments April 15th, and they were not processed until 10 to 13 days later. Will IRS assess a penalty? Well, they should not, because they were sent on time and you have a transmission receipt, right? You have that, they don't call it a file or ID. What do they call that? That unique identifier number you get. So what I would do is wait and see first, does the return process, do you get the letter or not? If you get the letter, you're going to make a phone call, start with a phone call to Practitioner Priority Service and say, can't you see on the transcript where this happened? I would get a copy of the taxpayer's bank account to show 2 things: what date the money went and that the money was there and available on that day, right? In my clients' cases, the money went out by the 30th. It should be the same statement, right? As long as they had enough money there on the 15th and you sent the request for it, should be fine. Now, I understand taxpayers who made their own payment on direct pay did not have this problem. I hear EFTPS had the problem, and if we e-filed the extension, they had the problem. I suspect we'll hear some guidance on this, and I suspect nobody's going to bother. I think you'll be fine. All right, everybody. Hard work will pay off. Don't give up. I don't know when, but hard work will pay off. So if anybody needs me, I'm around. I'll be around most of the weekend. Thank you for attending, and have a lovely weekend yourselves, please.